Welcome to On the Chain. This is Jeff. Today, check this out. Ripple, XRP. Now, the real reason politicians are pumping Bitcoin and Ethereum, could it be the same reason the SEC is targeting XRP? So, what is the real reason? Do we have to really get into this? Because these politicians are pumping Bitcoin, they're pumping Ethereum as commodities and non-securities. Now, it's very probable again that it's the same reason that the SEC is targeting XRP and Ripple, because big business is actually doubling down right now on buying the dip with really big names behind it, big names pushing Bitcoin and Ethereum. Now, the other thing is, who is really behind the big crypto market downturn? Because according to the owner and founder of FTX, I think you're going to be surprised as to who it is, because I was a little surprised when I saw what he said. And also, a big shout out to all the fathers out there. Happy Father's Day to every father out there. And if you guys are ready to kick this thing off, I think we're a little bit early and we're going to kick this thing off in style. So let's go.
Welcome to On the Chain.
I want you guys give a quick shout out where you guys are tuning in from. Let me know what you guys did for Father's Day today. If you did anything fun, I started off the morning with a run, ran, did some drills, did some pace drills, did some cadence drills, getting ready for a race next month, which should be a lot of fun. So I did that. And then we barbecued. And so that was an absolute blast. So let's see. Where should we start out? Also, yeah, give a shout out where you guys are actually tuning in from. So, man, there's a ton of stuff going on. We just got to pull up, and there was even some great commentary from David Schwartz. But I want to get into this one first and foremost, because this one came directly from the Bank of International Settlement, and then Chip actually had some commentary to go along with it. So I thought this would be kind of a cool place to start off. Chip is with his dad right now, so big shout out to Chip and Chip's dad, Matt Anthony, coming in from Clearwater, Florida. So, what is up, Clearwater? What is up, Nebraska? We got Damien from Sydney, Australia. And we got Finn coming in from Massachusetts. So, what is up, everyone? All right, we got that screen up and running. So, let's share our screen. Let's see where we're at. Now, I think a good place to start would be to actually show the tweet that Chip put out. He said centralization does not create trust. It's just the opposite. It's why central banks so vehemently despise decentralization. Now, this is, really spot on, because the whole concept of central authority, central power, and a central bank digital currency means that it is going to be completely centralized. The power of that currency, whatever it is, whatever digital asset, whatever CBDC, it becomes fully centralized. It removes central control. We're talking about decentralization, which almost always devolves into corruption when you have full centralization. Now, here we go. So, what does the Bank of International Settlements say? Coming soon, the BIS Annual Economic Report of 2022 will outline a future, check this out, future monetary system which serves the public interest. Special chapter to be pre-released. Now, what they're saying is that the current monetary system, based on this statement, the current monetary system does not serve public interest. So at what point do we think that if the centralized authority with a central bank digital currency, how are they again going to take a monetary system that doesn't represent public interest, according to this statement, right? Because the future, they're going to outline a future that's going to represent. So Where does that put us today? Where does that then put us in the future? Because the same people that are in charge now, according to this, will be in charge in the future, whether that's a year in the future or 20 years in the future. Central banks have and continue to be institutions of what? Let's let's see if we can get through this short video. No reason to to pull it up or do anything different. Let's see. Save the date. Okay, the BIS economic trust in money remains the bedrock of stability. I kind of agree with that. We need to have trust in money. His main message is simple. The soul of money belongs neither to big tech nor to an anonymous ledger. Interesting, but it does belong then to um, central authority. Central banks have been and continue to be the institutions best placed to provide trust in the digital age. At what point does that become a reality? Because again, Chip succinctly brings up that centralization does not create trust. So they're going after that some anonymous ledger. So if you have a decentralized ledger, that somehow there's no trust because you're building trust. You're building a trust mechanism, and trust is the foundation of business. It's the foundation of the valuation of money. It's really the foundation of everything that we do on a society within society. However, the whole reasoning behind having attorneys and contracts and everything else is because you then need to take your verbal trust and you have to put it into writing. And then that trust in writing has to be backed up by the court system. Now, if you can put in an infrastructure that is kind of decentralized in nature, where you can create a trust mechanism for moving money without the centralized authority having their cut or having their say so, doesn't that kind of elevate the protection of public interest a little bit more than the same old within our current monetary system that maybe is lacking in public trust, according to this. So I think it's really interesting. I'm glad that Chip found this because I think that's kind of a perfect place to start out on the conversation of the direction that we're kind of moving in. And Lee over here is saying, I believe they played us like a cheap Western tune, sold us on DeFi, and only settle with CeFi, centralized finance. They love their centralized finance. They love the concept. And they definitely don't want to lose their control because if you think about it, that is how they've really controlled everything that they've done up until this point. Whether it's being able to manipulate the individual or think about the retail investor. Think about every moment where you have big institution, big government, right? We know for a fact that there's representatives within our government that are benefiting economically from trades that they're making with insider knowledge of what they're voting on and how that is then going to directly impact the markets. Now, think about that. Think about how much money certain individuals have made, even coming down to Granholm, the Treasury Secretary, who are not the Treasury, is she Treasury? What am I doing? Granholm. Not she Treasury. What am I thinking? Hang on a second. Why am I what is energy? Secretary of Energy. Why was I thinking Treasury Secretary? Obviously she's not Secretary of Energy. So even as Secretary of Energy, this is why it's critical here because as Secretary of Energy, she is responsible, right, for what's going on right now with our oil, with negotiations with oil companies, and so much more beyond that. Now, she benefited immensely from investment in EV technology. Now, you have to really think about timing of it, when she invested, how she invested, but it goes way beyond what she's done, and it happens, you know, it's happened, across the board. Doesn't matter what side of the political aisle they're on. They always seem to come out on the positive side. They don't come out on the negative. Now, the one thing that is certain, throughout economic history is that you have retail buyers always seem to get the short end of the stick when they have to sell when it's low. and they get the short end of the stick when it's time to buy in, and they're buying when it's high. And the other way around, the institutions and the government officials always seem to time it perfectly, where they're buying at the low when all the loose hands drop their bags, and they buy at the low. They then stack it up, stack it up, stack it up. And then they say, you know what? These bags are now too heavy. I'm going to now sell them to you. I want you to be the bag holder because now it's way too high in price. So you be the bag holder now. So now retail is holding the bag. And guess what happens? Now it all starts, all the cycle starts all over again. And the thing is that we're seeing it within the crypto space. We're seeing it. We've seen it within real estate. We see it with stock, many times over. And we see directly the impact, coming through the SEC and coming through some of these government officials as they've singled out even some of the meme stock investors, and how they've really been triggered and targeted these individual retail investors or these meme stock investors. And not to say that everything the meme stock investors might have been on the 100%, on the up and up, if you're going in with a massive group sharing the information and trying to keep, pushing the stock valuation up. But at the same time, on the other side of it, with the institutions are doing the exact opposite. They're shorting the companies, and they're trying to push the price lower. And so this is the battle always seems to be between the institution, the government that represents them, or the government officials, I should say, that represents them, and then the retail investor. So now we're seeing it again very succinctly, very clearly, that that the general manager of the BIS is coming out, and maybe he's saying the part that shouldn't be said, but when he says that the future money system will now serve the public interest in the future, the digital one that can be traced, the digital one that can be tracked, the digital one that can be shut down if you're not abiding by the thought police of everything that they want you to say and believe. So crazy stuff. Real is saying, why would you say CBDC is better if you haven't used one or now how they work? Why would you say they're better or not better? So crazy. Um, Real says market bounced. Only way we go back down is if Nasdaq, the Nasdaq, the nice whatever. I'm hoping obviously for everybody's uh, sanity that the stock market turns around and goes back in the other direction. And I can't keep watching. This statement is just outrageous to me. So, all right, let's move on. This came from Hammertoe. So Matt Hamilton, what is Matt Hamilton saying over here on this tweet? And then we got some other tweets from the community that we can get into, and some of the other fun stuff. So let's see here. So Rand is saying breaking: 6 people have used XRP in cross-border transactions. So Rand NeuNer is host of CNBC Crypto Trader, founder of Crypto Banter, invests in protocols that will change the world, then give them enough time and support to do their thing. Interesting statement, right? That he's saying here, where he's saying invest in protocols that will change the world. So now, if you think about the XRPL is a protocol that can change the world. It's changing the way money can move, creating a trust mechanism, and facilitating liquidity where there is a liquidity issue. And so, okay, so let's say 100% game changer in the world. Then give them enough time and support to do their thing. Okay, now this guy's a host at CNBC. Think about this for a minute, right? 623,000 followers. And here's his statement, right? Breaking 6 people. So now he makes this statement on his Twitter profile that he wants to invest in a protocol that will change the world. Okay, the XRP ledger. Awesome. And then you want to give them enough time and support to do their thing. Now, what is it going to take the XRPL to do what Ripple wants to do and what other individuals out there want to be able to do utilizing the XRPL, and obviously we haven't even seen Flare launch. We're really in the beginning phases. Obviously, with Ethereum, okay, Ethereum rolled out with their smart contracts, and then you see an inherent issue within the protocol, within the gas fees, and then Bitcoin was supposed to be the money mover, and then we see the problem with it being slow, relatively inefficient, and also had a cost issue. So the ones that were supposed to be, they become, and you recognize the problem. And so why not wait until the XRPL is going to develop in the direction it needs to develop? And so he's contradicting himself and then coming after and making fun of anybody that's building in the space utilizing the XRPL. And he calls himself a crypto trader and founder of Crypto Banter, while he's going to then besmirch individuals within the community. It makes little sense to me. And so Matt Hamilton responds back, "Hey, how's your Luna doing, Ran? XRP really lives rent free in your head, doesn't it?" Man, it's so crazy. So David Jr. here was saying XRP does one thing and people talk like this. Matt Hamilton, I don't know, it does more than Bitcoin and people seem pretty excited about that one. So I mean, it's just, to me, we don't need this kind of negative banter. And I like real saying that Crypto Banter is a joke. Mr. Wolf is saying, I think Rand was fired from CNBC, is now running a pump and dump YouTube channels with his bros. So, and that could very well be, but I mean, it's crazy. So you go from, okay, this is host of CNBC, right? That's a mainstream media, 623,000 followers, and he makes a stupid statement like this. I mean, that's just insane. I mean, it does, okay, it might get you engaged and have some conversation, but that's crazy. I mean, I don't like it. Just makes no sense. All right. I hit the wrong button here. Let me pull that off. All right. Let us move on. Now, this is interesting. Who is this? Okay. Is this? Oh, look at that. It's a link that does the exact same thing. Now, here's the link that I was looking for. So Chip actually put out a response. So let's look at this response here. Today's going to be a great day. So let's see here. So his response: Ripple, the company, one of the best companies I know. XRP, the token, I still can't work out what it's used for. And Rand expects for people to take him seriously. So you're right. I mean, you're going to have statements like that. So let's see if we can pull this up. Hang on a second.
And Ripple, hodl or fodl.
Okay, hang on. I'm sure you guys can hear it. It sounds really loud on my side. So I'm assuming you guys can hear this too. Hang on.
And Ripple, hodl or fodl.
Ripple, I'm throwing in the garbage.
In the garbage? Yeah. You can't even say fodl. You're saying in the garbage. We need new animation.
Fodl.
Why in the garbage?
Because I've been researching the Ripple token, the XRP token, for a long time. Let me just make a differentiation. Ripple, the company, one of the best companies I know. XRP, the token, I still can't work out what it's used for.
Okay, wait. So, because a lot of people say you can't have the platform without the coin, and the coin is a statement as to how good the technology is. But you're saying that there's actually a difference.
So Ripple, the company, does the banking systems. It replaces SWIFT with bank-to-bank money transfers, primarily international money transfers. You don't need the XRP token to do that. So as far as I know, I can't find a use case for the token. So I'm out.
So nobody used it for anything?
Right now, absolutely not. And it's centralized, and that defeats the whole purpose of blockchain.
What is the utility?
All right. So obviously that was from 2018, but you kind of get the idea, you get the gist of where his mindset is coming from. So, I mean, it's so crazy, right? So right away, obviously he doesn't understand XRP. Even at that point, 2018, Bitcoin sitting at 8,100 at that point, May of 2018. Ethereum was sitting at $685 at that point. It's interesting to look back from a historical perspective, but why come out and he obviously doesn't understand even back then, exactly what the XRP is needed for in general. It's another asset. Why would Bitcoin then be better? Why would Ethereum be better? Why would Litecoin during that period of time be better. So why come out and single out XRP as a token he doesn't know what it's going to be used for? Obviously, he doesn't reference the XRPL. He's just completely clueless. And now we understand exactly where his mindset is, and continues on to today. 4 years later, he's still being an ass. So, and then he's on MSNBC. What a joke. I mean, they're obviously picking the cream of the crop over there. So Lee is saying, what a joke this guy is. We need less tribalism, like Brad Garlinghouse said, to successfully make the space friendly for all technologies. Jim D, if the elite global cabal of central banks and money changers go rug pull, Tether, USDT, BTC, we'll go back to the 8,000. There you go. Let's get back to 8,000. And Brent, he is irrelevant. And there you go. He's never met a developer. He's probably never spoken to anybody at that point, or fast forward 4 years, he hasn't spoken to anybody in the space that's a builder in the space. All right. What else we got here? David Schwartz. And then we're going to blast through some of the other stuff with all these individuals that seem to be doubling down on Bitcoin and all that. And not just the guy that we were just showing, but others as well. So, all right, David Schwartz. Michael Saylor, if gold owners could seize another investor's gold assets, change the universal characteristics of the metal, or decide whether gold mining is allowed to continue, it would be a security, not a commodity. David Schwartz says, what if it wasn't gold owners, but instead gold users and market participants, including those who hold no gold at all? And then he continues, for example, the control on Bitcoin miners is whether they can sell the Bitcoins they mine. That's not controlled by those who hold Bitcoin, but by those who hold other assets. They could trade to the miners. So obviously getting, a little bit over and beyond. So your miners will mine in Bitcoin if someone will pay money for the coins they mine, which is interesting, right? Because if you're going to spend the money to gain the Bitcoin, if there isn't someone on the reciprocal on the other end that's saying there's an agreed on value for that Bitcoin, probably there wouldn't be much mining going on. Now, he said if nobody will, they won't mine. So it's people who hold assets other than Bitcoin that could be used to pay miners that control whether miners can mine. Now it's getting into a confusing conversation. So he says it's exactly the same with gold. If people will buy gold, people will mine it. If not. It's not holders who decide, but potential buyers. I think it's actually a combination of both, because if you're going to have those that are going to hold the Bitcoin, so those that are mining it, they're mining it because there was a potential valuation. Now, in the beginning, when we get into Bitcoin and they started looking at the revolution that the digital asset space was going to create, there was little value. But obviously, then we saw with the whole pizza issue, right, where they bought, what was it, 10,000 Bitcoin for pizza. So at that point, there was some perceived value where they were, assigning a value of pizza with, let's say it's $20, would be worth 10,000 Bitcoin at that time. And so they began to establish some sort of valuation, and then it grew from there, because anything, if people perceive that it has a value and agree on the value, it gains in value. And then obviously there's other factors that are going to offset that. It's like merchandise. So if you take this external hard drive, right, it has value because we need it. But then why does one external hard drive from one manufacturer cost twice as much as another? Does it really have more value? Is it the same technology? And so there's other factors that are at play. But if it comes to money, money at that point is then assigned, value, and it's typically backed up by government, and that's what's giving it a little bit more value, because the paper doesn't have the value that it's printed on. But gold, could be, you could assess the same thing that we're assigning gold, or, if you move it into, precious stones or diamonds or something like that. Diamonds are, we have an assessed value on diamonds. The diamonds aren't necessarily rare. but they mine them at a certain pace. It's not that they can't find them, and then they overinflate the price on the diamond, basically because they've attributed diamonds to weddings and all sorts of other things, and so they've inflated the price point, but people are then recognizing that they're willing to pay that price point, for it. So I don't know. I mean, there's so much here. So it then does go back to David's point that it's not necessarily the miners or the holders, but it could then be the potential buyers of it that will then attribute, potential value to it. I mean, it could go on and on. Can it then be, the government? If the government is then going to, let's say, back up some of these assets. I mean, this is a crazy conversation, and it could go on and on. But I like some of the comments here. So Raw saying, imagine the Bitcoin world is only two guys. One is the miner, the other holds all Bitcoin. The miner who holds 0 Bitcoins is the one who can change every single property of Bitcoin, including turning off mining gear and deleting it. Holder has 0 influence. Jung says, basically, banks will buy XRP, and there'll be a high demand when other companies start building on XRPL using XRP as a native token. Am I correct here? And then, I don't know, then the conversations kind of go on until Extravod says, XRP, exciting times ahead, and one long, long XRP. I mean, holy cow. Crazy stuff. What's up, Mel? What is going on? Legendary. Can you imagine $10,000 pizza? Crazy. I think it was Mr. Beast ate one of the most expensive pizzas where they put the gold foil on it, and they bring in all these different expensive mushrooms, and they do all these things. And I think the pizza was like $70,000 or $80,000 for a pizza. Then he had like a $10,000 ice cream sundae. Yeah. So, all right. What else we got here? Let's go through this. Okay, so now let's get into this one. So if Chip were here, I would say, Chip, why is big business buying the dip, Bitcoin and Ethereum? What does this have to do with the politicians who are currently pumping Bitcoin and Ethereum as commodities and then singling out other assets as potential securities? What's really going on here? And then your brain starts churning and burning, and you say, who really is Satoshi, and have we all been played? I mean, that's right. You got to really think like that, because it's like, all right, so the government officials are pumping Bitcoin and Ethereum, and then all of a sudden the market goes down again, and now all these big institutions that were maybe a little bit leery of getting into the digital asset space seem to be jumping in to the digital asset space. And we're going to fly through who some of these individuals are. And actually, here's one of them. So none other than Kevin O'Leary, right? So what he explains why he's buying the dip in Bitcoin and Ether, and says the collapse of risky tokens will help the crypto market in the long run. And you know what? I kind of agree that, we're going to have kind of a bleeding of some of these assets out there, and we do need to get rid of some of the fake assets out there that are causing problems within the space. When we're looking at maybe 20,000 different assets, there's going to be a good number of those assets that don't really fit the equation, right? They don't have a solution. They're not solving a problem, or they have a solution but no problem to be solved. And then you look at it and you say, why? Maybe it was just a big fundraise for them to fund their company or fund their pocketbooks, but really had nothing to do with technology and problem solving. But he says here, he's also explained how he's betting on the best intellectual capital in the world, obviously from the Shark Tank, Mr. Wonderful. He said he isn't sweating the crypto bear market, and that's actually smart, and that take a little bit of a thought process here. And this is coming from a guy that, earlier on was a little bit against it. And then he started to say he had, I think, like 1% of his portfolio. I would love to know what kind of portfolio he has in the crypto space. But it's interesting. He said he's not sweating it. Why? Because he understands that, there's going to be a lot of positive that's rising out of. And I was just going to say, from the ash heap, and it looks like Mel said, yeah, XRP will rise out of the ashes. But here he says, if anything, he thinks it will end up propping up the whole crypto sector in the long run. Here he's okay here. So the venture capitalist explained why he's doubling down on tokens, including, so here we go, right? So hang on, he's doubling down, including what? Bitcoin and ETH, right? That's what he's doubling down on. So, and then there's a various other Web3 projects, but he's not really going to mention which ones most likely. But again, Bitcoin and ETH. Long term, you just have to stomach it. You have to understand you'll get volatility. Some projects aren't going to work out. Now, let's see what he says here. His portfolio reflects his bullishness for blockchain tech. He currently holds 32 positions. Well, there we go. So he's 32 different positions. He has Solana. He has Polygon. We've talked about Polygon before, right? We like Polygon. We like what they're doing. I think Solana also, they got some interesting stuff going on. Let's see what else. WonderFi just became the first crypto trading platform to be featured on the Toronto Stock Exchange. Interesting. But as the crypto bear market slammed, digital assets now make up 16%. Look at that. 16% of his holdings, but it's down from 20%. So he was holding more. So he's shuffled his position a little bit. Man, it is interesting. What does he say here? He noted that recent crypto collapses, such as stablecoin Terra, and events that teach investors caution can actually help further the tech underpinning of digital asset. I think I kind of agree with that also. Out of every bad can come good. And we have to learn from those mistakes as well. So we're going to fly through a few others, but what is Lee? Lee, appreciate your support on this. Big support. Thank you very much. From what I hear, XRP has a set price. In my opinion, it has to be high enough to cover all the money, assets, debt, etc. I firmly believe XRP was designed to have $10,000 value to be around for the next 100 years. And we've heard that from Schwartz. We've heard that from others that are, in the know, that in order to do everything that you need to be able to do with XRP, the valuation right now is significantly low, and it has the capability of leveraging at a much, much higher valuation. And then people look then at the market cap, and we're not dealing with these assets. We're not talking about regular stock. We're talking about a digital asset, something that is changing the monetary system in general, not the monetary system according to the Bank of International Settlements, where it's now going to be in the future favored to public interest because it'll become a centralized bank digital currency that they can then control. And at the end of the day, from their lips, work will set you free. So you didn't hear it here. You heard it from them, straight out. And it's interesting, Lee saying most people cash out at 50. I wonder, if you went around and said, okay, all the people with holdings, at what point do people cash out? People are they going to hold on tight, all the way up, or are they going to start cashing out along the way? And then, are most going to be cashed down? Now, the interesting point of all of this is as the markets change and we get more institutional investment now, like Mr. Wonderful there, 32 positions. We have no idea if he's in XRP or not, but then, we look from big name to big name, from venture capitalist to hedge fund billionaire. And not to say we don't have to go back and talk about Michael Saylor, because we know the billions that he's holding in Bitcoin already, as well as others. But hedge fund billionaire Anthony Scaramucci says his firm bought the Carnage on Bitcoin and ETH, right? There you go. Now, again, focused on Bitcoin and ETH, but there was massive carnage, right? Especially on ETH when it's trading under 1,000. And XRP dipping to 30 cents. When was the last time we saw a solid 30 cents? But so again, the thing that we have to really conceptualize here is exactly why we're seeing so many of these big business type and government officials kind of coming to a meeting of the minds, so to speak, on Bitcoin and Ethereum. Why are the politicians, the powers that be, that are going to then write the clarity, write the law on crypto, on the crypto legislation in the United States? I'm not talking about other parts of the world, but in the United States, why are they? You're seeing a merging coming here on Bitcoin and Ethereum, and a lot of conversation about it. So here you have, in a new interview with CNBC, the hedge fund veteran says that their current crypto market downtick reminds him of March 2000 when stocks were catering. Now, cratering. They weren't catering, but I don't know. Maybe they were. They were out. They were catering, getting a little bit of some fillet, maybe a little sea bass. I don't know. But so here's the thing. Now, we've seen the market downturn already a couple times with the digital asset space, with Bitcoin, with XRP, with Ethereum. We've seen that roller coaster a couple times. But now we're starting to see, again, some of the big capitalists in the space. And it's interesting that he's comparing it to March of 2000. Now, we've referenced that here on the show as well, in terms of looking back at the dot-com era, what it took to build it up. How many projects were out there? Chip and I were just talking about this yesterday. How many projects are out there that were solutions in search of problems and then disappeared from the face of the earth because they had no problem to solve and they just went away? But the only thing they had going for them was a .com, and that was it. So here, the only thing they have going for them is a blockchain or crypto, and then it goes away. He notes many of the internet stocks went to zero, but a few of the gems, like Amazon, right, and some others, really put up some massive gains. Now, in 2000, one of the pinprick points that burst the bubble wasn't necessarily .com, but it was when Al Gore and Bill Clinton went after Microsoft. So think about that, right? I mean, that was kind of crazy at that point. And it all kind of, kind of compiled one on top of the other because there was so much empty shell within many of those .com companies, way over leveraged, way overvalued. And then you have this, massive suit against Microsoft at that time. So, and I think it's interesting. So let's look where now Microsoft is sitting. Let me see here. Hang on. So Microsoft is currently sitting at like $249. I'm trying to see where it was in 2000. But so this was, what was the government's case at that point? So you had the U.S. kind of gang up on Microsoft. This is kind of around filed like 2001-ish. So 2000 was kind of the beginning, but 2001, they were going after them for accusing them of illegally maintaining a monopoly in the PC, right? And most of it was based on restricting others from loading up, and a lot of it, circled around the Internet Explorer browser. They weren't allowing any others to put their browsers. They weren't loading them up, and so they said that they were kind of overweighted. Anyhow, so that was kind of like one of the big cases of its time, and really led to a lot of changes from that point forward, when we saw kind of the bubble burst and we saw everything kind of collapse at that time. Everything then built back up 2001 forward. We saw it build back up until we hit 2008, right? And so the serious companies after 2000, 2001 came out of the ash heap, and that's when we saw the Amazons, and Microsoft ended up kind of resurrecting itself. Apple, in fact, also kind of resurrected itself out of there. Google, and obviously many other companies that really, obviously put up more than what we could ever have imagined. But then now, obviously in the crypto space, taking that 2010 time frame forward to where we are today, who would have thought that Bitcoin, or even XRP that was trading at 0.006, imagine 0.006 and then going to an all-time high of XRP at, what was it, $3 and what was it, 20 cents, 40 cents, 60 cents, whatever it was at the all-time high of XRP. Who would have thought that you could have that kind of an increase in valuation in this space, and we're just kind of dabbling. We're just kind of getting started with everything. We haven't even really gotten into everywhere in terms of where we're getting ready to go. So that's it. I I like that, putting a different spin on it, Alchemist. Always remember, not your can, not your garbage. And then make sure you tell that to your neighbor. Hey, that's my garbage can. Don't put your garbage in there. If it doesn't belong to you, it's not your garbage. Remember, not your keys, not your crypto. So that's a good one. I like that. And then that kind of goes with all the, the fear of, if you're actually going to self manage your own crypto. Okay, let's keep jumping through this topic, because we got kind of limited time to get this done. We don't need to pontificate on all other stuff. So here we go. Hester Pierce lashed out at the SEC for delaying the approval of spot Bitcoin ETFs. So that just happened. Cryptomon urged the SEC to treat spot Bitcoin ETPs through the same standard as it did with the Greenlight futures-based ETPs. So let's see, famously known as Cryptomon, but slammed the SEC watchdog for failing to greenlight spot Bitcoin ETFs. She said the organization should have proactively provided guidelines and regulatory clarity for funds and exchanges that aim to launch such projects. Okay, again, so now here's Hester Pierce coming out on the spot Bitcoin ETF. Okay, so it's another one. Again, the big focus in and around that space. Now, I think here's something that kind of shocked me a little bit. Now, this is a big statement, because now you start pulling things into some sort of a perspective to say, hey, why is there this massive downturn right now? And so interesting that the CEO and founder of FTX, right, crypto billionaire, says Fed is driving the current downturn. So let's see what this is all about. Let's see. Cryptocurrencies are going through a spectacular crash, and the head of one of the largest exchanges says the Federal Reserve is responsible. Look at that. Federal Reserve is responsible. The core driver of this has been the Fed, said Sam Bankman-Fried, the CEO of FTX. The Fed is raising interest rates aggressively to fight high inflation, and that has led to a recalibration of expectations of risk. Ooh, I probably talking to the wrong news source, because probably not going to get things accurately once it gets regurgitated through them. But any other billionaire said he appreciates the difficulty of what the central bank's trying to do, noting it is caught between a rock and a hard place. But Bankman-Fried said a lot of his own outlook for his business is now dependent on decisions the Fed will make. Interesting, right? In the months ahead. So is the Fed going to cause an absolute catastrophe here in the United States, which will have, repercussion on a global scale? But this week, the Fed announced the largest interest rate increase since 1994, which was massive. And we don't even know what the impact is going to have to the housing market that's finally gaining some steam. They might just kind of burst that little bubble, and that'll be the end of the housing market again, and cheap money, and leasing cars, and getting loans for new businesses, and everything. Everything is going to be impacted by what's happening right now. But let's see. Financial markets have already been extremely jittery, and crypto have been in meltdown mode. Literally, markets are scared, which is true, right? Now, people with money are scared because, man, I mean, what are you going to do with it? But interest rates, does that mean that bank interest rates, if you put your money in the bank, you're going to get more? I don't know. So let's see, Bitcoin, blah, blah, blah. All this stuff, blah, 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 blah. The biggest worry is what effect this will have on the large universe of amateur investors, calling you guys amateur investors, who have loaded up on crypto in the past few years. In 21, the total value was $3 trillion, right? That's massive. And then we see some of the powers that be that seem to impact the overall movement in this space. All the attention has brought in a lot of newbies, And one of the things that we've referenced here is how many people have actually, they got into crypto. Why? Because it was a way to better themselves, to make money for themselves. And many of them have remained relatively unbanked, or they were unfazed or uninvested, meaning they were not invested in traditional stock and traditional 401ks and all of the typical, business stuff that these big financial institutions were garnering huge amounts of revenue from, right? And so here, from this one point in history from 2010 till today, so in the past 12 years, it's given people on a global scale an opportunity to invest in themselves and look forward to building something amazing, as we've seen all these amazing projects. And in many cases, taking, some risk, and hopefully some leverage risk. And in other cases, not so leveraged risk. And obviously we know that there's also some issues in the space. Babel Finance, that had some liquidity pressure, right? And this is Celsius, froze withdrawals. Obviously a difficult moment, and obviously also, freezing. And there's others and that are in the same situation. Then we saw hedge fund 3 Capital having some issue. I mean, it's amazing. But he's saying that the fallout could shape crypto. Now the question is, if it's going to be shaped through a self-regulated framework, or is it going to be shaped via the jaded political framework? And I say jaded because they're going to go into it with this perceived notion, quote unquote, that they're going to be protecting the retail investors' interest, when in fact we know that they're only doing it at the behest of their lobbyists and those that pay, their bills. So there's a lot going on, a lot of interesting things here. Brian Armstrong said, we grew too quickly. Down markets are challenging to navigate, require a different mindset. Now we've had a down market not too long ago. Granted, this one is a little bit different because we have a lot of focus coming from politicians on a global scale. And there's a lot of things going on here, especially as this big push right now towards central bank digital currencies. We didn't have that a couple years ago. There wasn't this big push towards central bank digital currencies. And all of a sudden now, we're having this big push, towards that. Now, this is interesting. This comes from one of our very own JV. So this is what could happen to Ripple's escrow if they decide to start dumping or acting in a way that's not in the best interest for the XRP ecosystem. So Watcher Guru says, just in, Solana-based protocol Solend has voted to temporarily control the largest whales account to mitigate liquidation. There's another one. So they had to vote, and they temporarily are controlling because they don't want to sell off, they don't want to dump, so they're trying to mitigate liquidation risk in order to control the narrative. And so JV is just basically asking about that escrow. So, but the thing is here is they can't dump 55 billion all at the same time, but they could dump potentially, not to say they would 1 billion a month, because that's all they get is that 1 billion per month. However, based on the requirement of what's in there, they can't just dump it. They have to then, based on the validators, they have to then replace it, because that's part of the requirements of the escrow, that any of that unused amount has to be replaced. If they become bad actors, which they haven't shown up until today, Ripple, that is the overseer of the escrow, they don't control and can't dictate whether or not what happens to that escrow, because that escrow could actually be burned. That 1 billion could come out, and every one of those billion XRP could be burned on exit based on a vote of the validators. So I think there's a lot of that. But there's a lot of concern here. We have to ask every question. We have to look at this from every perspective. And Real saying, I would love the SEC to end corruption. Too bad they start most of it. Gary Gensler, the start of all of the issues in this space. So not 100%. But anyhow, all right. So here's another one. This is from Apex, our very own Apex. Let me throw this up. He made a little video for the community. Let me make sure I can hear it. And then if I can hear it, you guys can hear it. Okay, hang on. Let me just back it up because it kind of went on a little bit too long, even though it's only 8 seconds. That 8 seconds seemed long. Zoom in here. You guys should be able to hear this.
Crypto's not dead.
I don't know if you heard that, but he said crypto is not dead. So nice whisper. Thanks, Apex. That was coming from you. And then I've got a question. I've got to throw this out here. I've got to pull this one up because this has been bothering me ever since it happened. Now, hang on a second. Let me move this over to this screen. Let me zoom in here because this has really been bothering me ever since I saw this, ever since this happened. Now, we know that Joe Biden fell off his bike, right? Regardless of what happened to him, I've seen many people fall off the sides of cliffs or drop offs because they couldn't get their foot out of their toe clip. They couldn't release their toe clip in time and they get their foot stuck and they've fallen over. You get your foot caught in these toe clips, these old school. Now, here's my issue, right? Joe Biden is supposed to be the president of the United States, right? One of the most powerful men in the entire world. Now, my issue here, okay, he fell off his bike. Everyone's focused on he fell off his bike. What I want to know is why in the world does he have, and are they letting him ride one of the cheapest bikes out there? I don't understand. He has brakes from the 90s, right? He has the old braking system, right? So now there, you look at a bike, even the, $300, $400 bikes, they have disc brakes for better braking on the front and the rear. And, and then you don't have these kind of pedals anymore. These pedals are outdated. Now, the most powerful man in the world, why in the world don't they put him on a carbon fiber frame bike? I mean, they can't afford $1,000 bike. How about a $2,500 bike? I mean, $1,000 in bike world now is cheap. You can put them on a $5,000. I don't care if it's a $10,000 bike. Put them on a bike that weighs next to nothing. That he can easily move. Move it. With nice weight. Why does he have reflectors on this bike? I mean, every little inch of anything that's going to cause a little weight. Why does he have these bottle holders on here? Something that he could get caught up in. Why does he have a kickstand? I mean, I don't understand why he has a bike with a kickstand. And then why is he trying to get on his bike with the kickstand extended? Who does that? Who extends the kickstand? Why is there a kickstand on his bike? I mean, that's weight. Take the kickstand off. It's something he can get caught up on. Put disc brake on because you don't need all these extra cables here. Why do they have them on a mountain bike? Why don't they put raised handlebars to give him a little bit extra comfort? Why does he have a mirror to where he might get caught up on the mirror? I mean, every aspect of this bike, he's on a hybrid bike with these thin tires. Okay, I get that. Why can't they invest a couple dollars in putting him on a bike that has some sort of value? And then what is this thing? I mean, I don't understand what this thing is. Is this on his pants or is this on the bike? What is this thing in front of him, this plastic piece on this bike? I mean, it makes absolutely no sense. And I'm looking through this whole thing. I mean, the whole thing is an embarrassment to begin with, but this is even more of an embarrassment. What in the world are they doing on this horrible bike? I mean, it's a great, and even now, if you get a decent mountain bike, I mean, you can have these straight frames, but you put a little bit of a drop on the frame. You don't have to do a full, women's style frame here, but you can put a little drop, to get a little extra clearance on it and just make this bike, maybe put some shocks on it so he has a little bit of a smoother ride. It's not necessarily just for mountain biking. You just put the straight fork. I mean, I just don't get it. I mean, it's the craziest thing. And that is just like, and it's so funny for Rock. And I was telling a Chip earlier today, I was like, WTF, why Who made the effing idea to put him on a Huffy? I mean, it's a Trek, right? Trek makes a decent bike, but this isn't outdated, bike, an antique. Every aspect of that bike could hurt him. And it just has been bothering me from the moment that I saw it. Is just insane. I mean, every aspect of it, just insane. And that's where I think that's not his bike. And I don't think, I mean, none of it makes sense. Or maybe it is his bike and he pulls it out of the garage and it has cobwebs all of it. I don't know. But the bike itself doesn't make any sense. Oh, and even his gloves. Who said his gloves? John Doe. His gloves. He has full gloves, right? Biking gloves. Typically, you have, half or quarter, so your fingertips are free so that you can brake properly. Why is he wearing full gloves? Full. I mean, what in the world? I know I'm spending time on this, but what in the world? What kind of gloves are these? What is this? This makes no sense. What is he protecting over here? What is he? He's protecting his knuckles. I mean, when I used to street skate, my first wrist guards. When I got wrist guards, I thought I was invincible. I would skate no helmet, no knee pads. Then I discovered knee pads, and I thought knee pads were the greatest thing because you could jump 10 feet down and then you could land and you could, like, you wouldn't scratch your knees. And then you have like these wrist guards, so if you fell, you would. And but anyhow, but on a bike. Holy cow. I used to mountain bike years ago. I would just put sandals on and go mountain biking. And this is like, what kind of, what? I can't get over it. It just, that just shows me that not his bike. To me, it just seems like it was a photo op, that the whole thing was, they're like, hey, grab this bike, put him on this bike and send him over there. They get him in front of the cameras. A presidential bike, why wouldn't Shrek make a presidential bike? Why wouldn't they custom make a bike for him? Oh my God, a cell phone holder. Why does he want, Henry? Why does he want a cell phone holder on his bike? And it's a crazy ass cell phone holder too. I mean, I'm looking at that picture. I'm like, what in the world is going on? Oh my God. Right? Did that bother anybody else? I mean, other than the fact that the whole world's talking about him falling off. And then all of a sudden I look at, and Rusty, E-Town, it's rusty as hell. Hang on a second. I know I'm going way over the time. You guys got to look at this chain. Can you guys see that? The chain's all rusted out, right? These pedals. I mean, everything on it is just like, holy cow. That is not the bike. You're going to put the leader of the free world does not go on that bike. That is like number one. Whoever's decision it was to put him on that bike should be fired instantly. Fired. That is not a presidential bike. That to me is more embarrassing, almost than falling off the bike, is getting on the bike, and getting on a bike with a kickstand out is even more embarrassing, unless he's getting off, but it looks like he's getting on, and then he's got this kickstand over here. Like he's going to ride up to the ice cream parlor and he's going to put his kickstand down and leave his bike out with a kickstand. Oh my God. I can't get over it. I don't know. You guys are awesome. I went over time. I know it's 57 minutes. I told Jeff, I'm going to cut this off at 40 minutes and that's it. Oh my God. Come on. Rides a middle-class bike. I mean, man, honestly, when my son first started riding a bike, I went out and I ordered him one of the best BMX mountain bikes. And I went overkill because then he was young, and he, was having problems riding it. So I had to put training wheels on it. But he used to get the scoop bikes, the pedalless bikes, and he would like fly on this thing. And it was amazing. Then I got him that and I kind of ruined it. But then I went out again, and when he was ready for a bigger bike, I went out again and got the best BMX mountain bike or BMX bike I could get him. And now I keep telling him we're getting a mountain bike, and he's afraid to go out with me to go mountain bike. And I'm like, come on, we're going mountain biking. That's an embarrassment over there in that picture. But oh my God. Anyhow, Jim D, stop pulling his chain. All right. You guys are awesome. Anyhow, we will check you guys back out on Wednesday. We've got some shorts that we will put up. We got one dropping tomorrow morning at 8:30. Yeah. So that's right, Lee. Got to leave him alone on the shoes. Anyhow, you guys are awesome. And we will check you guys out Wednesday night, 8 p.m. Eastern Standard Time, right here on the chain. And as always, you guys are the best and the brightest in all of crypto YouTube space. Check you guys out on the next one. I'm out.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.